The global markets are currently exhibiting a textbook reaction to the announcement of a two-week ceasefire between the United States and Iran. Oil prices are sliding, equity indices are surging, and the collective sigh of relief emanating from trading floors in New York and London is almost audible. The financial press is framing this as a return to normalcy, a diplomatic correction that proves the strength of the current administration's maximum pressure strategy. This analysis is not just optimistic, it is strategically illiterate. When you look past the ticker symbols and the immediate market sentiment, you are not seeing a de-escalation of a conflict. You are seeing the opening move of a profound and likely permanent restructuring of the global energy architecture. To understand why, you must discard the moralistic framing of peace and hostility. This is not a conflict that is being solved by a two-week pause. This is a conflict that is being transitioned into a new, more dangerous phase of systemic attrition. The brutality of this ceasefire is that it isn't a pause in hostilities. It is a necessary logistical reset for a system that can no longer afford the cost of its own defense. Let us analyze the logic of this truce from the perspective of the actors involved. The administration in Washington requires this window. Why? Because the recent kinetic exchanges in the Persian Gulf have exposed a structural vulnerability in the American maritime projection model that cannot be fixed in a week or even a year. The deployment of high-cost assets to counter low-cost, high-volume threats, drones, swarm tactics, and anti-access area denial A2AD capabilities has created a cost-benefit deficit that is mathematically unsustainable. If you are a strategic realist, you do not measure the success of a war by the number of targets destroyed. You measure it by the ratio of resources expended versus the strategic gain achieved. By this metric, the current American posture is failing. For every Iranian asset destroyed, the U.S. incurs a logistical and financial cost that is orders of magnitude higher. When you multiply this by the frequency of skirmishes, you are not engaging in a war. You are participating in a slow-motion depletion of your own strategic reserves. The pride of the U.S. Navy and the Air Force cannot be defeated by a single engagement, but they can be rendered strategically irrelevant by an adversary that knows how to make the cost of their presence higher than the value of the protection they provide. Tehran, conversely, is not accepting this ceasefire because they have been forced into submission. They are accepting it because they are the ones who benefit from the predictability of the pause. They require the two-week window to harden their decentralized command and control nodes, to replenish their inventories, and most importantly, to signal to the regional powers, the GCC states, Turkey, and others, that the American shield is not a reliable constant. And here lies the second-order effect that the stock markets are ignoring, the long-term decoupling of regional security from American foreign policy. Every day that Washington maintains the status quo in the Middle East, the regional players are recalculating their futures. They look at the current ceasefire not as a sign of American strength, but as an indicator of American fatigue. When the guarantor of the system signals that they are willing to accept a two-week pause rather than an unconditional victory, they are implicitly signaling that their commitment is no longer absolute. And in the logic of regional power politics, a conditional commitment is no commitment at all. This is why we see the regional powers beginning to hedge their bets. They are not waiting for the U.S. to solve the Iran problem. They are reaching out to Tehran, to Moscow, and to Beijing to create their own localized, regionalized security and trade agreements. They are building their own lifeboats because they have seen the structural rot beneath the American deck. Washington views the ceasefire as a diplomatic lever. Tehran views the ceasefire as a deadline for their adversaries to accept the new regional reality. The economic fallout is far more insidious than a simple dip in oil prices. The market's surge is based on the assumption that the status quo will be restored, that oil will continue to flow freely through Hormuz, that the US dollar will remain the uncontested anchor of energy trade, and that the regional security framework will hold. That assumption is built on sand. The reality of the Middle East is that the Strait of Hormuz is no longer a neutral maritime corridor. It is a point of failure for the entire global economy. Every time the US forces a temporary fragile ceasefire, they are essentially kicking the can down a road that is running out of asphalt. The structural problems, the Iranian integration of asymmetric weaponry, the loss of regional trust in the US alliance, and the unsustainable economic cost of the current deterrence posture remain unchanged. If the US truly believes that this two-week ceasefire will lead to a broader, more permanent agreement, they are operating on a fantasy. The Iranian leadership does not view the conflict through the lens of short-term economic metrics. They view it through the lens of civilizational survival. They will not negotiate their own decline. They will use every second of this truce to ensure that when the next escalation begins, and it will, they are positioned to absorb the blow and strike back with greater effectiveness. We have arrived at a point where the status quo is the most dangerous option on the table. The longer the administration maintains this charade of control, the deeper the structural damage to their own power projection capabilities. They are trapped by their own rhetoric. To leave is to signal failure. To stay is to hemorrhage resources. To negotiate is to buy time at the expense of their allies' trust. This is the geometry of exhaustion, and no amount of market surging can hide the fact that the foundations of the old global order are fracturing under the weight of these contradictions. The focus on petrochemical assets, hubs of production and refinement, is not merely a military decision. It is an ideological assault on the concept of modern industrial capacity. By systematically targeting the very infrastructure that allows an autarkic nation to maintain internal equilibrium, the attacking power is attempting to force a transition from a functioning state to a failing one. However, this relies on a fundamental miscalculation regarding the nature of the modern Iranian economy. We are seeing a trend that should concern every market participant: the weaponization of the supply chain. If Iran and its proxies decide that the cost of defending these facilities is too high, they will not simply retreat, they will pivot. They will transition from protecting the oil flow to guaranteeing that if they cannot have access to it, no one else can either. This is the ultimate asymmetric card in the deck. It does not require a large navy. It requires only a few, well-placed, low-cost assets to turn the Strait of Hormuz into a graveyard for global trade. The mathematics of this war is simple. When you destroy the production capabilities of a regime that is already sanctioned out of the global market, you are not destroying its economy. You are accelerating its transition into a wartime command structure. The strategy of the West assumes that internal economic collapse will inevitably lead to regime change. History, however, suggests the opposite. Extreme economic distress creates a siege mentality that empowers the most radical elements of the security state. When the private sector is erased, the military and the Revolutionary Guard become the sole providers of goods, services, and stability. By targeting these hubs, the West is inadvertently helping Tehran complete its transition to a fully closed, militarized economic circuit. This is the ultimate asymmetric card in the deck. We must look at the second-order effects on the global energy landscape. The global market is not a neutral, objective mechanism. It is a complex, hyper-fragile web of dependencies. When Iranian petrochemical exports are disrupted, the immediate result is not just a price hike. It is a supply-side shock that ripples through the manufacturing sectors of Europe and Southeast Asia. The shock is not the event. The shock is the realization that the global system cannot absorb a single point of failure. If the insurance markets in London, the nervous system of global logistics, withdraw coverage for the region, the ships stop moving, the tankers go dark, and the price of energy enters a phase of volatility that no central bank can stabilize. This is the hidden trap that policymakers in Washington refuse to acknowledge. You do not need to sink a carrier group to paralyze the global economy. You only need to make the risk of transit too high for the private sector to bear. Once the insurance leaves, the world's most critical transit point becomes an empty, silent corridor. The strategic community in the West remains fixated on the idea that this is a manageable escalation. They believe that if they apply enough pressure, the rational forces within the Iranian leadership will eventually sue for peace. This is a profound misunderstanding of the regime's internal evolution. The pragmatic actors who once believed in the possibility of a negotiated settlement have been methodically purged or sidelined. What remains is a hardline coalition that views this conflict not through the lens of economic benefit, but through the lens of historical mission. They have reached a point where the cost of existence is war, and therefore, war is the only rational state of being. We are entering a phase where military power is being decoupled from political outcome. The West has overwhelming firepower, but it has no clear political end state that is achievable through that firepower. It has the capacity to destroy, but not the capacity to govern. And in the absence of a governing strategy, destruction is not a tool of policy. It is a tool of chaos. This brings us to the ultimate uncomfortable truth of this era. The global system is no longer organized around the principles of economic efficiency or the open movement of goods. It is organizing itself around the principle of resilience at the expense of integration. As these events continue to unfold, we should expect more, not less, of this systemic friction. The era of a seamless global market is behind us. We are moving toward a world where regional powers consolidate their spheres of influence, and where the cost of doing business will be determined by the proximity to conflict zones. For the average individual, this means that the era of cheap, reliable access to the fruits of global trade is ending. You are paying for the insecurity of the Strait of Hormuz and the price of your commute, the cost of your groceries, and the stability of your local economy. The distance between the conflict in the Middle East and your daily life is not geographic, it is economic, and that distance is shrinking every day. We are not watching the resolution of a conflict. We are watching the systematic dismantling of a global framework that was built on the assumption that it would last forever. It won't. And the final chapter of this history is already being written by those who recognize that the only true path to power in the next decade is not through winning the war, but through successfully surviving the collapse of the system that made the war possible in the first place. The trajectory is set. The only variable remaining is the degree of the friction that the rest of the world will be forced to absorb, and that is not a debate. That is a mathematical certainty. The American leadership, trapped in the survival calculus, will continue to push, creating more instability, more systemic fragility, and eventually a reality where the global order is just a memory. The Middle East is the epicenter of this collapse, but the shockwaves will reach every corner of the planet. There are no easy choices here, only trade-offs, only consequences. The reality is that the old architecture of stability is being replaced by the new architecture of disruption. Whether this collapse is accidental or orchestrated is a secondary question. The primary question is whether you are positioned to navigate the friction that follows. The transition is not coming. It is here. Adapt or become part of the wreckage. That is the only law that remains.